All right, so let's get started. Let's do a 2018 market wrap up. And also, I'll give my predictions of where I think that we will be in 2019 based off all the facts that you'll see in the video attached. And 2018 was really just a unique year. You'll see that home prices came up in the Las Vegas area, the greater Las Vegas area, by more than 13%. So monumental price appreciation, which we hope to see that slow down a little bit here. The reason for that was we just had crippling inventory. The world works off supply and demand. We had no supply. Pretty much almost every home, 90% of homes that went on the market were getting multiple offers, bidding wars, and that was all the way through about August. And then all of a sudden comes in September, there was like a switch that flipped. A lot of things happened. The stock market started having a lot of chaos going on it. It actually dropped by about 20% through December. So that just created a lot of uncertainty for the American economy that a lot of people just kind of hit the brakes. In addition to that, we had home sellers actually decide to start putting their houses on the market and adding inventory. At the same time, interest rates had really increased and they were peaking at that time. So there was just a lot of fundamental changes that we really saw in August that really started rolling into that September holiday selling season, which is always slower here in Las Vegas. We always slow down for the holidays. So the good news that came out of all of this is we actually accumulated some inventory here in Las Vegas. And I know the news is trying to point that out as a negative thing, but as you'll see as we go through the reports, oh my gosh, it was absolutely needed. We need this inventory and we need more of it. The reason is buyers are tired of bidding wars, and we just need to move into a more normalized market where houses are taking 30 to 60 days to sell, and there's some negotiating and different things happening in the market. So my goal with the market update for this month is to try to keep it as short as possible. They're always very long. I do my best to keep it short, but at the end of the day, there's so much data to cover. And I feel like if you're really interested in the market, you want all this data rather than me just rushing through it too fast to where I skip out on information. And also I do a lot of blog posts at greaterlasvegashomes.com, so feel free to go check out there for market updates. So you'll see a lot of the past ones that I've done. So let's get started here. Mortgage rate projections. You can see over here the quarter and also who is saying it: Freddie Mac, Fannie Mae, Mortgage Bankers Association, and the National Association of Realtors. And then this is the average of all four. So you can see that they're predicting about 1/4 of a point increase. We've already moved up quite a bit, about 0.75 or maybe a whole point, just depends on where rates are at the time you're reading this. A lot of people go, well, housing prices have to crash because, interest rates are going up. So that's a lot of what we hear. So let's talk about that. So here's a chart that shows a lot of time frames, like 1993 to 94, 96, 95 to 2000. Okay, etc. And then it shows in this time frame how much interest rates went up down here at the bottom. And then in the green up here, it shows what happened to housing prices in the nation over that time. So it is incorrect information to think that just because interest rates are going up, that housing prices have to go down. That is not at all what shows that has happened throughout history. So there is the bigger correlation with housing prices is the labor market and the unemployment rate. And as of right now, we have record low unemployment of like a 40-year low. So please do not think that those have a lot to do with one another. It does, of course. Higher interest rates makes it harder for buyers to qualify for more house, but it doesn't mean that housing prices are going to go down. So then some of the other naysayers out there that say the market is going to crash is because, they're giving away mortgages like they used to, that they're super easy to get a mortgage. This was released by the Mortgage Bankers Association. So this peak back here is like 2005, 6, and 7.
this is how easy it was to get a mortgage back then. So it shows that this is how it was for a long time. It shot straight up. And then all of a sudden they tightened it up so bad that nobody could get a loan at all. So yes, they have released the standards from the bottom a little bit and it's came up, but it was, 400% more, it's 400% easier to get a loan back in the bubble days. And that's why we went into the bubble, was because the mortgage business got out of control. We're nothing like that right now. Also, a lot of people don't know this statistic, so I put it in here. 35% of homes in America are actually paid off. So when you hear data about, the housing market, people that are underwater on their mortgage, first of all, you have to subtract 35% of people that their houses are paid off, and then we're talking about the rest when anything that it comes to mortgages. So it is still difficult to get a mortgage. Ask any of our buyers that are buying houses. There's only very strong buyers buying houses right now. So house prices are in part a reflection of supply and demand. As housing supply increases relative to demand, price appreciation slows down. And this was the chief economist from First American. So I want to make sure I emphasize this last line because a lot of people misinterpret this. Nowhere in this does it say price appreciation goes down, that housing prices fall. This says price appreciation slows down. What that means is houses will stop going up in value as fast as they are, and we'll get into that right now. So here is what has happened. This is a big picture across the nation because about 95% of the country saw a very similar pattern. So it's very easy to do on a global, well, not a global, but a very big macro scale here for America. And we had 37 months. These red lines down mean that the year-over-year inventory levels decreased. So if you're looking at January of 2018 versus January of 2017, there was less homes on the market. And the same thing, January 2017 versus January of 2016, there kept being just this no inventory on the market. So when there's no homes to buy, we go back to that first thing about supply and demand. There was no supply. So this is why the demand was still there and housing prices have been moving up at a record pace. However, what we just finally started to see is we actually, after 37 months, are starting to see some more inventory actually come on the market. I know that the news likes to tout this as this is a super negative thing. Oh my gosh, the housing market's going to crash. We have had no homes to sell for the last 2 years. We do not want housing prices to keep going up at the pace that they were appreciating. So we need this inventory to come on the market. This is a great thing to get back to more of a normal market, because if you really want to buy a home, and for our buyers that bought over the last couple of years, it was a huge struggle because there was no homes on the market. Therefore, every home that was on the market was getting tons of offers and getting bid up. That's not the environment that we all want to continue to operate in. So big picture, here's what happened in the United States. As we get into some of the next data, this number is going to be important. Obviously, you can look at your state here. Nevada as a whole went up just over 11%. And this is CoreLogic data. And then in the United States, it went up on average of about 5.1%. So we'll kind of see where that's going to play, what everybody's predicting right now. So 5.1 is, what we came up, and you can see what a lot of the predictions were here. This is the Home Price Expectation Survey, which is hundreds of economists and real estate professionals. Zelman and Associates, Mortgage Bankers Association, and National Association of Realtors. So now you can see that this is what these places are predicting in 2019. Now remember, if they predicted this and we came out at 5.1. So these are pretty accurate predictions, it seems like. So 2019 and 2020. What you're seeing here overall is you're seeing that our level of appreciation is going to decrease. Now again, that does not mean that homes are going to go down in value. They're just going to go up in value at a slower pace based on all the expectations of a lot of these resources right here. So then there was another survey done, projections from 100 economists, market analysts, and real estate experts. And this data shows that they predict 94% are predicting that house values will go up, 4% feel that they will depreciate, and 2% no change. So 96% of people either predict home prices will be flat or move up, which most of them obviously predict it will move up. And how much? So here's a state by state. Remember last year, we went up about 5.1%. So they're saying about 4.8% as a nation. And we can get back to Nevada. We were 11.1%. Now they're predicting 8.8%. We will get into some more localized data for Las Vegas. And I do want to say that not every single house, goes up this exact amount. It definitely differentiates between city, by price point, by area. So there's definitely a lot of deep nuances into this. But this still should make you feel optimistic that it's a great time to buy a house right now. Here's a chart that I found pretty interesting here. So this is how much home prices have increased by state since 2005 through 2018. So pretty crazy here in Nevada that we have only came up 9%. And when you look at all these other states. So, I mean, really, we just, when that housing crisis happened, we got hit so hard, and we've still never fully recuperated, that all these states, have benefited way more. So obviously, this is why there's a big migration pattern into Nevada right now, because our housing is still so affordable compared to a lot of other states and the amounts that they have moved up over the last decade or so. So before we move into the other data, this is a good chart to reference back to if you just want to rewind the video at all. But this shows here that less than 6 months of inventory, home prices will appreciate. 6 to 7 months, I usually like to say around the 6 months, houses are pretty much just going to move they're going to stay flat, go up with inflation a little bit, couple percent. But then when you get over 7 months of inventory, that's when home prices are going to depreciate. They're going to come down. So remember this 6-month rule as we get into here. So less than 6 months, home prices will appreciate. So let's move into the greater Las Vegas area now. Okay, so here is what happened. This is 2017, the December of 2017 versus December of 2018 and what the change was. Then over here is year to date. If you were to take the entire year of what happened and the entire year of what happened and compare those against each other. And this is single family homes up top, and this is townhouses and condos down here. And this is all through the December data. I'll move this down real quick so you can kind of see that. All right. So now let's kind of walk through. I like to go big picture here. So new listings, we had about 5% more listings of single family homes come on the market year over year from 2017 to 2018. We actually sold 6.7% less, or I'm sorry, 6.7% homes less were pending. And then we had closed sales of about 7% less in the single family home market. If you actually jump down to closed sales down here in condos and townhouses, it was pretty much flat. So the hardest thing here is to really explain this without having just a lot more graphs and taking a lot more time. But really, the reason our closed sales fell was because we simply did not have any inventory for the first 8 months. It was crazy. We had no homes on the market at all. There were so many offers on every property that literally we just could not keep up with the demand, and there was just no homes on the market. So that is why sales fell. Now, yes, you are hearing about this new listings inventory coming on the market. And here is why, because in the very late part of the year, we had a lot of new listings come on, a lot of new inventory come on the market. So now we would just happen to be during the holiday season when that's when our home sales tend to be at the lowest. So it's fine. We're going to absorb this inventory, but more importantly, again, the news tries to point out that this is really negative stuff. If you look at this in 2017, month supply of inventory, we had 2 months supply. Now remember, back to this graph, less than 6 months, home prices will appreciate. So here in December, as inventory picked up by 35%, we still only had 2.7 months of inventory. So this is not a negative thing at all. This is absolutely needed in our marketplace, is to add more inventory on the market so that we can actually help buyers buy homes because there'll be homes to sell. And we've had so many sellers that have said they're not willing to sell because they're afraid that when they sell their current home, they won't be able to buy their next home. Therefore, they're just in a wait and see mode. Well, more of those sellers are now starting to come to us and say, hey, wow, we're starting to see some homes come on the market. This is great. We're thinking about getting our home listed, which we'll talk more about that in just a second. So you can also look down here through the townhouse and condo data, but same here. That inventory was super low in 2017 and for the majority of 2018, and it just shot up right towards the end of the year. You know, what was going on, big picture, the stock market got crazy, people started freaking out. So a lot of home buyers just put the brakes on for a short period of time through the holidays. Now, you know, everything's getting back on track. We're seeing homes go back under contract again, and, you know, we're back off to the races. So 2019 is going to be great. So the next slides, I want to talk about new home builders. Somebody had asked me, you see down here, it's new construction. I don't really like to talk about new construction a lot, and here is why. I truly don't have all the data. The reason for that is new home builders, this is all I can do is pull reports through our MLS, our multiple listing service. But a lot of home builders sell a lot of their homes with never going through the multiple listing service. So whatever the data is here, take it with a grain of salt. It's been this way as long as it can be. There's a lot of other public information that builders release that I just don't have in this report. So if we're looking at here homes for sale, you know, we're seeing here as we start off 2019, we're pretty average around that 500 mark for homes for sale for new home builders. Yes, that inventory has picked up a lot recently, but again, it's pretty average here. This is when the builders actually just started building after the drought, and they just really ramped up here, started building, and now we've kind of caught up this last couple of years. So the median days on market, those homes, if they go into the multiple listing service, which typically means that, you know, they've been trying to advertise it as a builder while they were building it for 6 or 8 months, and it's getting close to being finished, and they don't want to sit on the house, so they actually list it in the multiple listing service. So once that happens, they're typically sold right now in less than 40 days, which you can still see is a pretty low number in retrospect over the years. Here's all the years down here. And months supply of homes for sale, just under 4 months here. And again, that did climb, but we're way below where you see the builders usually like to have inventory. They usually like to have 5 to 6 months of inventory so that they actually have homes to sell. And again, take all this data with a grain of salt, but overall the health, I personally, if I'm giving my opinion on new home builders, I feel that the prices are a little elevated. And not necessarily with the houses themselves, but for their premiums that they're trying to get on the lots and some of the upgrades. So I think that they need to get more realistic because those are selling at a large premium over the resale homes. So that's it. Once those get adjusted here, as we get a little bit more inventory on the market, those builders are just going to have to get a little bit more realistic. Okay, so with home prices and mortgage rates still expected to rise, the best time to buy a home in the next 5 years will be today. Absolutely. Why do you want to have, why do you want to wait and have prices continue to keep going up and have interest rates continue to keep going up? So definitely make the move today. Now, if you're thinking about selling a home, so when do the most listings come on the market? That is April, May, and June of every single year. So right now we are in January. This is a great time to get your house on the market before all the others come on the market. So the number one reason to not wait until spring, the supply of listings increases substantially entering the new year, including new construction. And if we actually go back and look at one of the graphs, you can see that with new construction, and which could lower the demand for your house, because obviously you have other people that you're competing against. But you can definitely go back, this homes for sale, and you can look and see that as we roll, here's the dates, January of 2015, 2016, 2017, you can see exactly what happens, how they intentionally drop their inventory down, and then it ramps right back up for the new year. Drops down, ramps up. That's just the way that builders do it constantly. So you will be competing also against more new construction out there in those years.
My predictions for the 2019 Las Vegas real estate market is really I want to focus on that $400,000 to $900,000 price point. I would anticipate seeing appreciation of more like 5 to 6% in that price point. Anything under the $400,000 price point would probably appreciate at a little bit faster rate. And then the luxury home market, really $1 million or more, you're going to see that appreciation definitely slow down to probably more, flatline to 2%. There's just some extra inventory coming on there, and there's a lot of new construction that's happening in that price point. So that's going to slow that down a little bit. Transactional volume, I definitely see our transactional volume increasing. As you saw in the video, we dropped 7% year over year because we had that crippling gridlocked inventory. Well, now that that inventory is opening up, we're starting to get the calls from the Las Vegas homeowner that says, man, I've been stuck in my house for the last couple of years. I really want to go buy my dream home, or I want to downsize. And over the last 2 years, I haven't felt like I could buy my dream home because there was multiple offers on every house and there was no inventory. So now they're starting to see some nice homes coming onto the market, and they're sitting there for 30 days. So now they're feeling a little bit more comfortable to get ready to put their home on the market and then buy their dream home or downsize so that they can start traveling and reduce their expenses. In regards to the new home builders, I think that they're going to have to get a little bit more realistic. Now, I don't mean that home prices are going to drop in the new construction arena. I just mean that builders have been extremely aggressive with their lot premiums. They've been really aggressive with their upgrade premiums and their incentive packages. Now, as this additional inventory comes on the market in the resale arena and buyers have more choices, the builders are going to have to get more realistic and start lowering those lot premiums, and also lowering, throwing in some additional upgrades that are in the base price of the house. And they're also going to have to offer other incentive packages. So I see some more transition happening there in the builder market, and that's a great thing. I mean, in 2018, we represented a lot of buyers that bought new construction. The reason for that was there was literally no inventory in the resale market. And if they wanted to be able to be guaranteed to buy a home, they were forced into new construction. So with that said, that's not going to be happening the same way in 2019 as the resale market inventory increases. So the builders are going to have to just plainly get more competitive. Home prices are much more attached to the labor market. And if unemployment is low and people have great jobs, they're feeling wealthy, they're feeling good, they've got extra money in their pocket. So of course they're going to go out and they're going to buy their dream home, and they're going to enjoy buying real estate and living in a house. So that's much more what to keep an eye on is the labor market versus like the stock market and the chaos that happens occasionally in there, because there's no direct link as much as there is with the labor market and the job market. Well, thanks for watching, and I'd love for you to comment below. I'd love to hear some of your predictions on what you think is going to happen. And of course, if you're going to give predictions, I would love to see some facts that back that up, like I provided all the facts in the video. Thanks for watching.